Hey everyone, today we're going to talk about funding your live and flip or a long-term fixer-upper with your VA loan. A lot of people don't know that you can use a VA renovation loan, right, to perform both of these depending on your strategy. And there's a way to do this if you already have a VA loan, and there's also alternative options if your VA loan is maxed out or you don't qualify. So we'll talk about that before the end of the video. So let's get right into it about funding your live and flip or long-term fixer-upper with your VA loan. So we're going to cover the VA renovation loan like I mentioned, and if a lot of people don't know about it, use it before on the buy side, right? When you're coming into the deal, you usually want to find a fixer-upper if you're trying to go for appreciation. Right? And that's where the money is really made, is doing the work that people can't do because they don't have capita or they got a bunch of other things going on, whatever it is. But to be able to get the work done on renovations that are value adds can be a benefit when you go to sell, if that is your strategy, and possibly to rent as well. And let's not forget that you may want to do renovations just for your own comfort. You deserve it, right? It's your home. So why shouldn't you be able to do a few renovations and have it placed onto your loan on the front end, right? Here's a quick example. You find a property, it's $400,000. You want to offer $400,000 on the property. Great, let's include all your loan costs. It's just everything's $400,000, let's just say. Great, you got about $25,000 in renovations that you would like to do, right? And we'll talk about which kind of renovations that qualify for this program, for the VA renovation loan. There are certain ones, but they're good ones, right? We'll talk about them, but they're good ones. So $25K worth, great. They'll slap it right onto the loan. You work with the lender. Right? You're not working with the person you're buying it from. You're working with the lender, and then they'll say, boom. And then there's a couple other restrictions. There is a time limit, and there's also a cap on how much it could be, right? Can you take out a VA renovation loan and do $100,000 renovation, or a $200,000 renovation, or $5,000, $10,000? We're going to cover that. Please, let's get started. Let's just go ahead and jump right in it. All right. Before we jump right into that, I want to tell y'all, welcome to Military Wealth Club, right? This is the place to access wealth in real estate, business, stocks, and crypto. A lot of you guys already know me, but I'm Mercedes, the Military Realtor. All right, now we can get started on the VA renovation loan. So what is it? Pretty much gives you money to do renovations. That's it. That's as easy as it is, right? Like I said, there are some conditions on how much you can borrow. There is a time limit on the amount of time to do the renovations, right? The renovations, there's some other stuff we're going to get into. Let's not get ahead of ourselves. All right, so who's eligible, right? If you're eligible for the VA loan, you are eligible for this program. Right, if you know how to pull your COE, I have another video on that. Go look through my playlist. There's a VA only playlist, and there's a video about how to pull your COE off the va.gov site. If you don't want to bother with that at all, then just contact me. I can connect you with my lender, and the lender can pull the COE. A little side note, all the lenders I work with, all the lenders I refer to, I recommend, are veterans, right? That's a big deal, right? If you don't already know, I'm a veteran, of course, but I always recommend business out to veterans first, and that's important. Some people, they work with companies like USAA, right? Navy Federal. They really don't know that company's not military owned, right? And it's such a huge conglomerate. I'd rather help out another small business, another person that I know, another neighbor, another service member that served alongside me. I'd rather give them my business first than anyone else. So that does make a difference. It really does make a difference. So the lender can pull the COE. So if you want me to put you in contact, just reach out to me. You can make an appointment on my website, themilitaryrealtor.us, and you can make a quick consultation for us to have a little chat just about what your plan is, right? And it doesn't matter if it's 2 years out, if it's 3 years out, the earlier the better. We want to plan as far out as possible so you're ready when the right property comes along. And that's exactly what I did with my last client, was where we sat down out Starbucks for about two hours, talked about everything, life, his wants, his desires, where he's at, all these things. But we really do have to talk about that to really figure out what is it that you want and set that criteria. And if we have some things to work on the financial side, great, you can clean that up, work with the lender. The lender will point you in the right place. And a lot of people don't realize you're ready right now, right? I had a friend that was going to move back home. Her and her partner, they were going to move back home, and they were going to live in the parents' basement, and they were going to save up money. And then they wanted to move to another state to buy their property. And she's a veteran, and the other person was not, but that's not a problem. But she wanted to save about $60,000. And I'm like, why? You have a 0 down loan with no PMI. Like, you can go to Montana, wherever you want, Idaho, whatever state you want, California, Texas, Florida, North Carolina, right? It doesn't matter. You can take that VA loan and use it as best as possible. 0 money down, right? So don't forget that. All right, let's keep going here. So anyone eligible, right? If you got a good COE, you're good to go. And if you're worried about eligibility, right, have a whole other video on who's eligible for the VA loan. Go check that out as well. But here's a quick note, right? Active duty, you got more than 90 days, more than 180 days. You are definitely good to go. Reserves, National Guard, 6 years, right? Now, if you want to knock that out quicker, you could do active duty time and volunteer to do a deployment. That's what I would do, right? A lot of people go in the reserves of the Guard and they don't really maximize the benefits. Like, get in, deploy as fast as possible, get that benefit for you to be able to use your VA loan, right? And then if you just want to do your standard drill, fine, whatever it is, but you're not waiting to collect your points or collect your time in, right, throughout all that time, right? 6 years? You can have access within the first year, right? If you really want to, especially depending on your MOS, your rating, and the branch you're going into in the reserve side, right? Volunteering could be very easy. You could join in 2025. You could join and most likely do a deployment and be back before the end of the year, right? It could be that quick, and then you have access to your benefits, right? Now, you have to follow the amount of days. There's a certain amount of days, so you have to make sure that you're meeting those requirements, right? We're not talking about a deployment to Chicago O'Hare Airport because you're the postal guy, mail clerk for the Army, right? I don't know if you guys even on paper consider that a deployment. Anyways, so we need if that is considered a deployment, bravo, you can do your time. Go ahead and do that if you want. But try to get your 6 months or a year deployed, going somewhere cool. Anyways, let's keep going. That's just my personal opinion. All right. So a lot of people worry about credit, right? Income requirements. Things are flexible, right? If you're self-employed, right? Recently you're changing jobs. You've been at a place long enough. It doesn't matter. Let's have the conversation. Let's take a look at what we got going on so that we can address it and then go from there. On the credit side, people don't realize that, I want to make sure I'm clear on this, there is no minimum credit score for a VA loan. There is no minimum for a VA loan. There is no minimum credit score for a VA loan in the VA handbook, right? So everything's lender specific. Some lenders only want to play with 620, some 580, some 540, right? And then there's credit repair programs. That's what I'm talking about, is that if we need time to fix things, we have time. You don't understand how many people just say, I want to buy now, I want to go look at houses now and do all this stuff and get all this stuff going, right? Get the realtor out to do showings, get the lender worked up, all this stuff, and then lender pulls all this stuff and your COE's messed up, right? You're not able to pull your COE because there's an issue on your DD-214 or you're still in and there's an issue with paperwork, right? And right, that could take time to clear up with the VA, of course. But just running the loan, underwriting it, all this stuff, we want to make sure we're taking care of this way before. So that's why I tell you, right, get you connected with the lender. We take a look. They're like the quarterback when it comes to your finances, right? When it comes to the finances, that not the quarterback, like a head coach of that department of finances, right? So I'm passing it this way, and he's writing a playbook based off of what he's looking at, off of what you got, right? Your statements, whatever it is, whether you're self-employed, W-2, current military, retired, it doesn't matter. He's taking a look and then seeing if you qualify right there or if we got some things to work on. Like I said, we work on them over time, but at least we have time, right? And you're not in a pinch. You're not like, I have to buy for whatever reason, death, divorce, and anything like this, of I have to buy, and then you get in this pinch. We don't want to be there, right? We want to have the option to be able to say no to properties, to be able to back away from properties if we need to, and to not be under pressure, right? Under duress to make any weird calls. But let's keep going here. So credit, don't forget, yes, it is important. Yes, it's helpful, but please do not be shy to get connected with me, for me to connect you with the lender, so that we can start that conversation, because you have to start somewhere, right? If you know you got some jacked up credit, okay, what? Everyone and their dog got jacked up credit, right? Oh, it's fixable. You can repair it, but we got to start somewhere, right? We have to know. You have to reach out and tell me, hey, I want to buy a house this year, or in 2 years, or in 3 years, or in 4 years. I want to talk to a lender and start getting set up on the financial side. That's all it takes, so that when the time comes, you're ready and prepared and you don't miss out. That's the big thing. A lot of people miss out, right? With offers coming in, right? Some people put a pre-qualification on an offer. They're like, hey, we're pre-qualified for X amount. We're good to go. And that may push a realtor to say. That may not push a realtor to say anything. That may push the seller to choose that offer over all of the other offers. All right, you gotta be careful nowadays. You gotta be careful. I ain't catching me slipping. All right, let's see. Okay, so let's make sure we recap that portion here, right? So we know who's eligible for the VA renovation loan. If you're good on the VA loan, if you have that COE, you're good to go. If you need us to pull your COE, great, I can coordinate that. And then finances part, credit, it can always be repaired. Don't forget that. Your credit can always be repaired, but we need time to repair it if that is the case. And surprisingly, a lot of people qualify right now. They just don't really understand that you can qualify, right? All right, let's keep going. All right, so let's talk about how much money you can actually borrow using the VA renovation loan. Like I mentioned in the beginning of the video, 100,000, 200,000, right? Are we doing another addition, 2 stories, something like that, a new update for that much? Probably a whole nother house on the land for that much. Well, let's not get too carried away, right? We've got a maximum of $50,000, right? So imagine what you can build, what you can renovate for $50,000. I personally did for about, I believe, 40,000. We did kitchen cabinets, countertops, we did appliances, we did the backyard, we did pavers, turf, new vinyl fence, a closet system for the main bedroom, a closet system for the guest bedroom, both bathrooms, new countertops, and some bathroom fixtures themselves. So about 40K. And I did that on separately. I didn't do that on a VA renovation loan. I did that on my VA. I did that not on my VA loan at all. I paid for it separately. I had the funds for it, so I decided to go that route. But I could have also done a VA, which I'm not gonna skip. We're gonna get to that part. But 50,000. I want you to remember that, right? 50,000. All right. Now you do know you have regular VA loan limits. That's something differently. Don't confuse VA renovation loan, right, with a standard VA loan for an entire property. Those are different. The VA loan is based off your county limits, of course, right? 806,500 is a common number. If you don't know yours, you can Google it and find your county on there and find your local county limit. Conforming county limit. So CCL, you can Google CCL and find your location on there and it'll tell you. Now, there's no limit though. So that is a limit, but you can go past that limit. You can qualify for $1.2 million on a single family home, right? You can qualify for a duplex, a triplex, a quadplex at whatever price. It's, do you qualify, right? The VA loan is a vehicle and there are some other conditions, right? You may have to put money down. It depends on what you're trying to do. People don't know you can use your VA loan with a co-borrower, right? You can use it with your spouse. You can use it with a friend that's also a veteran. You guys get a bigger property, combine it. There's a lot of options that we can stack this, and that's why I always tell people to book a consultation for us just to talk about anything under the sun, right? And I may have the right answer for you right there at that moment. For example, we get a lot of questions about buying land. No, you cannot just buy raw land with your VA loan, but there is a way to buy land and get a new construction built at the same time using your VA loan, which that's a whole different video. So let's keep going with the VA renovation loan. All right. So we mentioned that we could do a few things with the VA renovation loan, a few upgrades, right? Not everything. So you're not going to do a demo and a rebuild and a foundation. There's a lot of things that this is for renovations. We're not trying to innovate and trying to add an addition or something like that, right? So a new roof, that'd be pretty nice. Here in Colorado, there's a lot of hail. Roofs go left and right. So a new roof could be great. And that may be something that you can take on. That may be something that your realtor wasn't able to negotiate for with you and the seller to get a concession for or to get it actually repaired. Okay, if they don't budge on that, but you absolutely want the property, great. You can use your VA renovation loan to get that taken care of. All right, next we have kitchen upgrades. We have flooring, right? A nice floor goes a long way. That's what I definitely loved in my house that I bought in San Diego. That floor, yeah. Anyways, bathroom additions, right? Like I said, tubs, stand-up showers, countertops, cabinets, 24-karat toilet, whatever you want. It's reasonable. Look, there are some conditions, all right. All right, there are some conditions. So here's the condition. Well, here's one of the conditions. All right. So your appraiser, right? Your appraiser, that's a person. Appraiser and appraisal, two different things. Let's make that clear. So your appraiser, right, is going to do an appraisal on the property. And the home's final appraised value must reflect the value of the home after renovations. So that's the key to the loan amount cannot exceed, right, the post renovation appraisal. We got that? So the appraisal is going to come, do the appraisal on the property, right? And then he's going to look and say, okay, this makes sense, this doesn't make sense, right? Why are you guys proposing to do this type of work, right? And you're going to have a VA-backed contractor, right? So they are a qualified VA vetted contractor. We're not going down to Home Depot to get work. All right, they do amazing work. I'm gonna tell you that much. They do amazing work. I'm not gonna say I condone. I'm not gonna say anything about it. They do great work. They do great work. But the VA it's not gonna fly with the VA. But if you know a contractor, right? Maybe your cousin, your brother's got a company, right? If you have enough time, maybe they can get certified by the VA and they could do the work. Right? And that could be a really great way to keep stuff in the family, in business, whatever it is, and you're getting the work done most likely at a great rate, whatever it is. If it's at $50,000, that's your prerogative. But anyways, definitely go that route. The appraisal, like I said, has to reflect the value of the home after renovations. That's the key. The loan amount cannot exceed the post renovation appraisal, right? So the loan amount cannot be more than the home is going to be appraised at. For example, in a regular just standard transaction, this is pretty much the same thing, just a regular transaction. If I'm buying a place and it's $400,000, that's the offer. An appraiser is going to come out and do an appraisal on the property. The home has to come in and appraise at $400,000. There could be some wiggle room in there, but it has to come in at that price to get a loan. If you're coming in cash, you don't even have to do an appraisal. You do whatever you want. But it's for the lender, right? And the lender, they're not going to cut a loan out, right, for more than the house is worth. It's like if you're going to go buy a $20,000 car, but you say, hey, I'm going to pay $30,000. Right, you can do that with your cash, but you're not going to do that with the bank's money. That's why the bank, they do the same thing. They Kelley Blue Book the car that you're going to buy, and they say, hey, this car is really worth $10,000, and you're trying to buy it for $18,000. Is there any other reason? Are there any other things? A new motor, transmission, airbag system, security system? Is there anything else that's adding value to this, right? And that's the same thing. That's what an appraisal is doing. So that's a key right there, right? We got to make sure that those numbers make sense. All right, let's keep moving. Okay. All right, so we're going to go through the whole process of using your VA renovation loan from start to finish. So by the end of this, you're going to know the exact pathway to take and that we would take if you reached out to me and we got started on this journey together. So let's go ahead and start. So number one, I want you to decide you want to do this. Like you want to buy a property, right? So this is a VA renovation loan, yes, but this is tacked onto a VA loan. So in this scenario, you're a buyer. Whether you're E4 in the barracks, 5 in the barracks, you're PCSing, you have a family, whatever it is, you've decided I want to buy. Whether it's this year, next year, or the year after that, or in 5 years from now, right? Let's have a conversation about it now. Let's plan. We got to do proper planning, because piss poor planning leads to piss poor performance. And we don't like that, right? We want to perform well. We want to show up when the time is right. All right, so number one, decide you actually want to do this. Number two, reach out to me. No matter where you're at, nationwide, you want to have a conversation about this, you're ready to do it, it doesn't matter. You can be in Japan, you can be in San Diego, you can be down in Tampa, you can be down in Miami. It doesn't matter. I'm here for you, so give me a call and I'll help you get on that start of your journey. It's talking to our lenders, right? Who, like I said at the beginning of the video, the lenders that I recommend and refer are all veterans, right? Just like myself, and any realtor that I recommend that I can pair you with in your local area is going to be also a military veteran and or supports military and knows the VA loan specifically, because we're a different breed. Our VA loan is different, our attitudes are different, our PCS mindset. There's a lot of other things that just a lot of people don't understand. So they'll say that, yeah, they know the VA loan or something like that. It's like, do you? So anyways, but I always ask if they're veterans. Number one, I'll always choose a veteran over someone else. Of course, it's all based off of merit. It's all based off of merit too. But if we're talking neck and neck, I'm going to choose the veteran, right? Let's make that clear. All right, let's keep moving. All right. Okay, so after we get connected, I'm going to connect you with the lender. You're going to get pre-qualified. Great. Pre-qualified. If you're working with me, great. We're going to have a conversation over probably 2 hours or so, just talking about every scenario, every question you got, going in depth about exactly what you want from this property and what you want out of yourself and life over the next few years. And that helps me really put the dots together to see, well, are you going more for a pure investment style, going this way right here with just, hey, I want ROI, great. Or are you going over here with, I want the personal stuff, right? With I'm looking for a home for my family, right? And that maybe it's long term, right? 10, 15, 20 years, even 5 years, great. Or something speaks to you, something very emotional. Or in between, right? In between the two. But we have to really identify what is it that we want, so that when we're looking at this, we have a set criteria and it's narrow. That's exactly what I did with my realtor. I said, you know what, I want to take the liberty of doing the search myself. I found a bunch of properties that I wanted to look at. I went over them, every single photo, all the details, fine-tooth comb, very organized, whittled that list down, and I made his job a lot easier because I know what I want. Now, if you don't have the time or you don't enjoy that, like I personally enjoy that. To me, it's like hunting for something. It's like looking for a good bargain. You know, maybe it was my time in the swap shop as a kid, back in Broward County. But anyways, yeah, maybe it's something like that. I like looking for stuff, but let's keep moving. I don't want to get too distracted. We got stories for days here, so let's stay on topic. So we want to find the right property, have that refined criteria, know exactly what we're looking for, right? Leave it up to me. Great. I find the properties for you. This is a hypothetical scenario, right? We have to remember, I'm not your realtor. I'm not your agent currently at this moment. And none of this is financial advice, right? So let's be clear. But in this scenario, in this hypothetical scenario, you're working with me. I've already connected you with the lender, right? He's pulled your COE. You are pre-qualified. We know, let's look at this price range right here based off of all the information we know off of the financials you provided the lender. Great. We're going to look at between 5 and 750 for whatever, right? It's a big range, but I'm just putting this number out there, 5 and 750 for whatever reason. We have the criteria of the bedrooms. We know if we want to be more ROI focused or personal focused or between the two, right? Being able to split the two, being able to really weigh it out. but we have our criteria set. We've scanned the area. I have a refined list, right? Next, we want to go look at the properties, right? Most likely about 10 properties down on this list. Let's go take a look at the top 10, right? Let's really go look at it. And if we have something that speaks to us, great. You can tell me, let's put an offer in. Let's write an offer. This property was $550. It's exactly what I wanted because it's 3.2, right? Or maybe a little bit bigger. Let's go with this scenario. Let's say it's a 5.3 and you want to pad split it, right? Eventually you want to live in it and you want to house hack it. Eventually you want to move out and then throw another person in that 5th bedroom, which you can use pad split. Anyways, that's getting a little down the weeds. But we've identified you want the ROI, max ROI in that way, right? In that way of multiple bedrooms, multiple people, right? You can still do great ROI with rentals of a 3.2, right? Renting to a long-term family near the base, like an E7, E8, E9, or an officer. You can usually get them to sign a contract for their entire stay. Right, it's 4 years. That's pretty good, consistent money. And rentals for military is great because if they don't pay, you can call the command. So we've identified we want this ROI structure. Great. We want to put an offer in on it. Great. Let's say it's like I said, $550. You want to put this offer in. I write all the information. I write this perfect contract. We put the offer in. We did as best as we could. Now, negotiations can start if they accept the offer. So it's not just the offer goes in and we're like, please, Lord, and that's it. No, because there's still a whole nother round, right? This is literally like boxing. There's still a whole nother round, right? Let's say they accept the offer. Beautiful. They've accepted our offer as is. They said, we don't want to change anything. Great. Now we're going to go into the next steps of the regular contract, which this is the regular route of using your VA loan, but where you're going to see how the VA renovation loan stacks right on top of this in this process. All right, so we've got our offer accepted. Next, we're going to schedule the appraiser to come by to do an appraisal, right? And that's a specific VA appraiser that has to come do that. All right, so we have the appraiser, and then we have inspections. So you may want to do a certain amount of inspections. You may be required to do certain types of inspections depending on where you're at and the condition of the property. So even though your loan is 0% down, I suggest that people have as low as $1,000, as high as $1,000 in money for inspections depending on where you're at and how in depth they are. For example, I had to do a foundation inspection on my home. I didn't have to. Yes, I had to because of the loan, but I definitely wanted to get it done because it's the foundation and that's a big deal. So we paid a little bit of money for that. Great, got it done. He cleared it and I'm like, all right, this fits my needs. Now, I didn't necessarily think I was going to live in that property forever, right? So if you're planning to, maybe that's your forever home. Maybe it's, maybe I don't want to buy it because of the foundation and I'm trying to live in here for 50 years. But if you do, just know that that may be something that needs to be addressed, right? That definitely may be something that needs to be addressed in 10 years, or it gets monitored. You have someone come inspect it every year to see if there's any shifts. But yeah, inspections. So appraiser, inspections, appraiser, inspections, right? Inspections, get them done, great. You like it or you don't. I'm not going to go too into the weeds in the contracts. There's different states, different all this other stuff. But if you don't like what you see, what you hear from the inspections, right, you may be able to back out from the contract. They found this, and we don't even want to offer, or we don't want to even go to concessions and negotiations to get it fixed. That's fine. We don't want the property, right? Now, you can go into negotiations, which I 1,000% advocate for. Your realtor should, if they're your agent, they have a fiduciary responsibility to fight for you tooth and nail. And I'm not here to be buddy-buddy with the other realtor and make things super easy. To me, it's like we're boxing, right? Or we're on the basketball court. We're on the gridiron, right? We're actually playing this game. Afterwards, we're friends. We're all professional. We're cordial. But you have to leverage negotiations. That's the whole game. You know, you're not trying to necessarily press everyone for their last penny or this and that. but you'd be surprised that the other side may ask for a concession, and you got to know what you have. You got to know the ammo that you got and that you can use if you would like to. And everything can be used in negotiation, so be careful with your realtors as well. And if you don't want them to disclose certain information about yourself, like your name, sometimes some people don't disclose the address of the property, but the reason why you're moving, right, the motivation, the reason why you want to buy, if you're on the sell side, the reason why you want to sell, right, those are important things that if you don't want your realtor to let the other party know. Also, like, if you have other offers, other realtors call all the time asking like, oh, do you have any other offers? And depending on what you tell your realtor, that can dictate that. Your realtor may say, no, we have no other offers. Or they may say, actually, we do. Or they may lie and fluff it up, right, so that they can get a good offer from the person that's asking. All right, but just be cautious with that about what people share, because it can affect negotiation. Now, let's say in this case we do the inspection. The inspector says, and let's go over the types of inspections that I recommend: HVAC, electrical, plumbing, and electrical. For sure, those three right there. Some will add roof depending on where you're at, depending on the season, but those are a good basis right there. Now, you may be required to do a septic inspection if your property's in a rural area. And in a rural area, you have access to the VA loan, but you'll also have access to the USDA loan. That's also a fun fact that you can use later down the road, and start stacking these loans, right? Because there's certain limits. Anyways, that's for a different video there. All right, let's keep going. The inspection portions, you don't like it for whatever reason, hey, I want to back out. Or you can say, let's enter into negotiations about concessions. Hey, this repair is going to be $10,000, concede $10,000. And there's a lot of ways you can do this, but it's pretty much saying, hey, we want $10,000 worth of something from you guys to compensate for this. And either I'm going to get it repaired at some point, or I'm not, and I'm just going to pocket the money. Or you can have the seller do the repairs. Hey, these repairs need to be done by closing, but it can survive closings. For example, don't get stressed if, hey, they didn't repair everything by closing. That's okay, right? Because that contract survives closing. So if, the faucet didn't get fixed by closing, that's okay. They still have to commit to it, right? They still have to perform because it survives through closing. So those are your options. You can have them do the repair. You can have them give you money. You can say ignore it, right? And don't say anything. I'm fine with the inspection. Or say, I really don't like it. I'm going to back out. So you have your inspection, you have your appraisal, right? The appraisal needs to come in at what the property is worth. That's very important. It rarely doesn't, and if it doesn't, right? So for example, you offer $400,000 on the property, appraisal says, hey, it's $390,000. Well, what do? Right? Well, the seller can down $10,000, right? Concede, because the appraiser said that that's what it's worth. Now, obviously, it could be appealed, right? We can get another appraiser, then we can get more comps, all the comparables, all these other things. But just the quickest thing, the seller could say, "Oh, okay, that's fine. I'll concede $10,000 and bring it down." And technically, they're not conceding. It's not a concession, but they're conceding in a way where they're lowering the purchase price, right? So instead of $400,000, hey, let's change the price to $390,000. Okay, great. Let's do $390,000. That's what it's valued at. Then they'll process the loan. Great. Now we're at loan approval. The loan's being worked on at this whole time, but the loan's waiting for the final contract of the appraiser, right? Of any concessions, inspections, everything good to go. Awesome. We've got the loan fully approved, and now we get a clear to close, and we're good to go right from there. Now, kind of step this in that process, right? You have some renovations you want to do. You want to do a new cabinet system, a new floor, you want to do a new roof, whatever it is, that's the K. In this case, with this property, which we're going to say is $400,000, right? Like we said, let's slap that $30,000 onto that for renovations. Great, cool. And like we said, the appraisal has to make sense as well. And then we have time limits on how much you can borrow, right? Or not time limits, but the quantity of how much you can borrow. And then we have a time limit on how long the repairs can take. Right, so we're about to get into that. So once the repairs are finished, there's a final inspection to make sure everything's good to go, right? Because they need to inspect it for their loan to protect their interest hey, we gave you 30K. We want to make sure you actually use this 30K for the stuff that you and the contractor said, and we're going to do a final inspection. Awesome. Cool. All right, let's keep moving. All right, now let's talk about some mistakes that you can make with the VA renovation loan, which some of these, I mean, they're going to do everything in their willpower to not allow these types of mistakes, but plenty of things can creep through all the time. Paperwork, mistakes, this and that, especially with appraisers too. The first one is with an appraiser, and those can take longer with VA, but we do have the luxury of having pretty much no time limit in a way with your appraiser. But anyways, let's just jump right into it. So skipping the appraisal process. All right, don't skip the appraisal process or the inspection. You have to meet the minimum property requirements by the VA handbook, right? So don't skip the appraisal, don't skip the inspection, don't try to dodge it, don't. Man, anyways, I'm not even gonna get into that. All right, getting a VA approved contractor. Don't be faking no documents. You can't. They have to be registered with them. All right, they have to be registered with them. So don't entertain anyone else. Don't entertain someone that says, I'm a VA. It's like, okay, are you in the system? Are you in the system, right? I know some of y'all down in Imperial Beach, the Home Depot. Yeah, don't do it. Don't try to get by. Don't try to get $30,000 loan and then cut some deal with the guy, okay, and try to get a VA approved guy. That's it. If you got your cousin Day, whoever that one is a contractor, wants to get VA approved, have them go through the process way before you're trying to do this so that they can get approved. And if you want to keep the money in the family and your friends, whatever businesses, cool, but tell them to go get approved, and then y'all can hire him to do whatever renovations on whatever property, right? Doesn't that sound kind of cool? Anyways, and I'm not even gonna go into that. All right, so underestimating your renovation costs. Obviously, I had someone tell me, oh, I'm anticipating about 30K. I'm like, all right, so let's allocate 50, right? Because if you go over, you have it. If you go under, great, you've got a bonus, right? If you can't allocate what you can allocate, you have to think over. It's always more. I'm telling you, like it's very rare that it's on the dot. And if it's on the dot, these contractors are eating the cost usually because they want to stay on their word. But things can change. So as a contractor, you know, if it's in their clause, in their contracts and stuff, but just pay attention to that. So they're going to do a scope of work of what everything costs, and because they are VA approved as well, they're under a little more stringent guidelines than your regular contractor that you're paying cash for, right? That you have to talk to in pictures or just this horrible work, right? Your cousin Billy Bob that came down from Appalachia or some, and your cabinets are jacked in the middle of the night. Your cabinets fell down. Anyways, we're not here to talk about the quality of the craftsman, but make sure they are VA approved. They're going to create a scope of work. Great, everything's within limits, right? Let's get the work done. Let's push for it. Do not get super close to that 50K line. You're going to have to supplement the rest with your own money, right? You can get, I advocate for it. If you want to max this thing out, max it out. If you want to use just use half of the benefit. We're going to talk about a different type of loan that you can use. But, you know, you don't have to blow it all at once. You don't have to use a little bit. It's your loan. Everything's specific to you. There isn't just one complete guide that's going to know all the details about your life and your inner workings, right? All right, let's keep going. Here. All right, so we know the VA loan, that's what this is riding on, right? Kind of being attached to afterwards, right? So your VA loan is your initial, I want to buy a home. Your VA renovation loan is saying, hey, I want to renovate this home that I'm buying with additional funds. Cool. All right. You have your VA cash out refinance. All right. So that's exactly what it sounds like. You pull cash out and you're refinancing the loan at the same time. So if rates are 6%, they drop to 5%. It's a few years, right? It's been maybe 3-4 years have passed by. You say, hey, I don't foresee maybe that rates are going to drop. You know, this is good as it's going to get for now. Let me refi it and let me pull out some cash, because I need to pay for my kids' education, for a vehicle, for a vacation, for a renovation, for a liquidation, you know, all, whatever you want. Cash out, refi, right? Cash out refi. Don't forget that. Different from a HELOC, home equity line of credit. Different. Similar but different. Okay. Cash out refi. Cash out refi. Okay, cash out refi. Cash out refi. HELOC, home equity. This is your home equity line of credit, right? So I'm gonna pull some money. I got a line of credit. I say, hey, I got a line of credit, 50K on this. I can borrow from that as I please. It's a line of credit. That's a different story. You have your VA interest rate reduction refinance loan. That's called your EARL, right? Not your cousin, right? Not your cousin Earl, but it's also known as a streamline loan. So just think about a streamline. Hey, interest rate reduction refinance loan. Okay, if you're doing a refinance, I hope to the Lord that you're doing a rate reduction, right? I'm not refinancing to get a higher APR. I mean, the finance world, you can buy anything. They sell these loans, by the way, on the secondary market like 10 seconds after you buy them. Anyways, so you're going for the lower rate, right? Rate reduction. It's just a streamlined refinance. That's it. Hey, I don't want to pull any money out. I just want to refinance. Streamline, boom. A lot quicker than a traditional refinance that's not in the VA system. All right, cool. All right, now this is what I was talking about before. This gem connects exactly to the VA renovation loan. So your VA renovation loan is performed on the front end when you're buying a property. You find this fixer-upper, I want to put 30K into it, I want to put 50K into it, great. You can then purchase that property, do your renovations, and there's a time limit to do your renovations. Now, if you already own a property and you want to do renovations, you can do a VA supplemental loan. See? Someone's talking about me. I know it. One of y'all watching this, talking about me. That's why I sneezed. All right. So your VA supplemental loan is similar to your VA renovation loan, but here's the difference. Your VA renovation loan is used on the front end while you're purchasing the property. Your VA supplemental loan is used while you're already in the property. You've already purchased it and you would like to do renovations at this time. VA renovation loan is at the beginning when you're buying, at the beginning. Why did I say beginning twice? I don't know, but it's at the beginnings. Anyways, let's keep going. All right, that's important. So if you're already in a property, you're not too far past. You can get this ready to then sell down the road, right? Newer renovations, fresher renovations can attract more dollars than ones that are worn, right? Maybe out of date as well. So this is checkers, or excuse me, this is chess. This is chess, this ain't checkers, right? You can game this how you want to game this to get what you want, to get a great ROI and use these strategically, but we have to have a little bit of foresight and forward thinking, right? And really get down to exactly what we want to do with that subject property. All right, we have a VA energy efficient mortgage. So if you want to go green and save on your energy bills, we know electricity is expensive. I remember in San Diego, they tell us to, not use power at this time and that time, and I'm like, y'all ain't telling me what time. That's just not how it's gonna work. But I didn't consume that much power in my house. So anyways, so energy efficient stuff, if you want to do that, right, you're able to get financing for that as well. And then there's the Native American Direct Loan, right, NADL program. That's for our Native American brethrens and our sisters that are veterans, specifically for them. So that's awesome. And that relates to federal trust land. So yeah, that's pretty cool. No loan limit on that as well on the NADL. So, and if you already own a home, if you don't know, with your VA loan, there is foreclosure prevention, right? And in these next couple years, and if not already, a lot of people are filing for foreclosure, and there is free help out there. There's free protection out there to help you out with some education. There is some other paid stuff, some other paid companies that will reach out to you. Those may be different services, right, than helping you stay in your property with foreclosure protection, right? There are paid services where people, they'll help you sell, they'll help you do whatever. I'm not going to touch on that. That's separate. When it comes to free services, right, they are available out here to help you with education and to figure out if you do got to do a short sale, if you can get a few months of grace, figure out the situation, right? definitely there's some free help out there, so don't forget that. All right, now I did promise that there were going to be alternatives to using your VA renovation loan. So there is the FHA 203K loan. A lot of people don't know about that. A lot of people don't know about FHA. FHA is also a great route. It's not 0% down, but it is 3.5% down. First time homeowners, it's not just for first time homeowners. So just know that you could have multiple properties and still use FHA. Anyways, we won't go too deep into that. What else we got? Yeah, all right, so our big ones to recap for VA loan products, just a quick recap for this video. We have our main, right, our main old trusted steed, the VA loan, right? Now, if you want to do your renovations while you're buying, you can attach the VA renovation loan, right? There's also the energy efficient loan. There's also the supplemental loan. The supplemental loan, right? So if you want to do repairs while you're already in the property as well, right? We mentioned there's the NADL loan as well. That's simply put, right? We're not even going to get into, at least not in this segment, but we're not going to get into FHA and conventional and DSCR, right? And seller finance and creative finance, which falls under creative finance, but seller finance, and then subject to, you have options. And the biggest thing that I want you to know is, do not get caught up with these influencers that are trying to sell you these courses and these communities that you don't need. Don't get caught up in it. If you're not trying to be this type of investor, that type of investor, it may not be worth your $8,000, your $5,000, your $10,000 for a group that may not take any action for what you want, right? That may not be for you. You're just trying to buy one house and live in it, and maybe buy 4 or 5 more throughout your 20 years. If you do 20, you don't need a whole investing community where you have to pay a bunch of money to get into, right? That may not be for you. That is for some people. I want you to know those communities are great because what they do is they connect. You're paying for a network, and you're also paying for knowledge, information, tools, right? These connections. Some of them have, we have a vetted lawyer, we have all the underwriter, all these things, great. That is amazing. If you're going down that route, that's a beautiful route, chase it on. But if you're just trying to buy one property, right, you don't need to go pay $5,000, $8,000, $10,000 to learn how to do this stuff. You just gotta watch my videos. That's it, right? We want to get you started with one. How do I use my VA loan one time? What's the first time? How do I do that? Right now, you could go the single family route. You could go, I want to go multifamily out the gate. Right? Okay, there's some things we gotta set up then to get there. Right, looking back, I could have done a route where with my first property where I then sold that property, had about $90K in proceeds, and I could have rolled that into a multi-unit property and used part of the remainder of my VA loan to get that property. I could have done something like that, right? And maybe combine my VA loan benefits with another member to qualify better for that one quadplex, or maybe go bigger, maybe something different. So there's a lot of different routes and options that you can go and that you can use your VA loan to get there. And then maybe you max out your VA loan and whatever route you go, and maybe, I want to use my another different type of loan over here, right? And I want to stack. And then, hey, I want to use my VA loan statement. That's a whole nother video. I'm not going to get into that right now. I want to use a VA loan reinstatement. A lot of people don't know what that is. What's a VA loan reinstatement? That means we're going to play again. Well, okay. And I'm not talking about VA loan reinstatement lets me use my VA loan twice. That's not what I'm saying. You can use your VA loan plenty of times. It depends on your limit and what you're qualifying for, right? But let's just give an easy example. This is the most rudimentary way. This is the easiest way to think about your VA loan entitlement. Let's say your county loan limit is $806,500, right? $806,500, and whatever county, who knows, county. I don't want to put a county out there because I don't want you guys to get caught up on the prices of these homes but this is an example that I'm trying to illustrate and paint for you to see clearly. All right. So this is the easiest way to understand your VA loan entitlement. Let's say your local county, the total county limit, ELL conforming, oh God, what is it? CCL. See? CCL. The conforming county limit is $806,000 with $500. 806,500, right? Let's say somehow you find a row of $100,000 properties, right? Over time, you find them just in the same community, on the same street, whatever it is, right? We'll start at year 0. You buy this property, the first property, $100,000. Right? Let's just say everything comes out to the whole loan, everything, $100,000 flat, right? Your county loan limit is $806,500. So take 100 off. Great. Now we're at $706,500. Right, you want to buy another one in a year? You can move out of this one, move to that one in a year. Great. Do the same thing. No money down, no PMI. Keep doing that. We want to milk this all the way to 806,500. Right, as close as possible. So let's say in theory we get all the way up there. Boom. Now you have 8 properties. Right? 8 properties under one VA loan umbrella. Now, the odds of that, I'm not saying they're impossible, but who knows where you're at, who knows where there's such a difference between the county loan limit and these properties that you're actually buying. You know, you could be out in the sticks and you're finding these great properties, not just knocking them out. And you know that over time, these properties are going to go up in value. There's going to be more humans, more people, places are going to develop. So you buy all these properties under that one VA loan. And then you can do a reinstatement. And then you can do a reinstatement of your entire VA loan entitlements if you wanted to. And do it all over again. Have that benefit, right? The benefit is 0 down. That's the benefit. That's the best benefit of the VA loan. 0 down, almost no cash on cash needed to go into the deal, right? Okay, you got to pay for appraisal, your inspections, if you have some stuff, some admin, some title work and stuff like that. But you may not at all. Everything's negotiable, right? Depending on your realtor or your abilities. Let's say your realtor's abilities to negotiate, they can negotiate everything if they really wanted to. If they really wanted to, you could have the seller pay for everything. Between the seller and the lender, you can have them pay for all your admin fees, repairs, points, whatever you need paid, anything and everything is negotiable in a contract, right? So consider that. I really try to tell you guys to just think small at first. I really want you to think as big as possible, but we need to be realistic. I don't want you to have FOMO and think, oh, like these influencers are like, I gotta wake up at 5 a.m. Okay, wake up at 5 a.m. All right, this is what I want you to do. I want you to write 50 business names, right? Not even a piece of paper. Go get a paper towel and write these business names using your little brother's crayons, right? And then we're gonna register all 50 of these businesses before noon, and by 3 o'clock, we're gonna have $4 trillion in business funding. It don't work like that. None of it works like that. Look, this get rich quick, we got secret ways. No, nothing is new. Everything's just reinvented and reformed, and none of it's really a secret. They just want you to pay for it, and you're really not going to use it. Half the folks don't want to buy all these properties and do all this management and do all this work because it takes work. When you start getting to the investment side, ROI side, it takes work to find these it's a full-time job. It's a full-time job. That may not be for you. You may still be serving, and you just want to buy one property. Hey, I just want to get started with one property. I'm not trying to pay $10,000 to get into some course and go to some trips to wherever, to do some masterminds that are really exclusive but really don't give me anything. Like I said, some of these are great, and they are for those people, right? For the investors. But if that's not you, you have to be able to say, yeah, I'm just cool with Mercedes The Military Realtor talking to me on YouTube about the process for free. You could book a free consultation with me, and I'll talk to you about what you got going on, whether that's your current career, you're serving in the military, you're transitioning out of the military, you're a veteran. I was speaking to someone a couple weeks ago. They're in their 60s. They're a diesel mech. They're out of the military, of course, but they're trying to retire on the civilian side, and they didn't know they could use their VA loan. Anyways, all these things, right? And that's what I'm here for. I'm a free service for us to talk about your career, to get you on the right track of where you want to go, to build wealth through real estate, business, stocks, and crypto, right? That's what Military Wealth Club is about. That's it. For us service members, we deserve to reach for the skies as high as possible. Don't think so small of just the paycheck of you serving. That's minute, and that's a certain amount of time in your life, whether that's one contract, 2, 6 years, 10 years, 15, 20 years, 25 years, 30 years. It doesn't matter, but things go on. And you have to think about your investments now, because the biggest things that help investments grow is time. You need compounding interest over time. And then there's a tail, and eventually this thing starts ripping, right? Especially if you're in it early. In your life, you may go through 4 major cycles, major economic cycles. And if you ride those waves every cycle, it just keeps going up and up. And by the time you're ready to retire, right, if you started investing when you're 18 or 20 years old, just a little bit every month, dollar cost average in every month, by the time you're really ready to retire, which could be at 40, right? This is what I try to help members with, especially when they're going in. If you plan to do 20 and you start investing from the day you go into the military, and whether you're an officer or whether you're enlisted, you may be able to retire fully when you get out at 38 years old, 39 years old, 40 years, whatever, right? Because you have to think about it. You have your military pension, you may have disability, and then you have your investments, right? Not just your stocks and your TSP and your BRS, but your properties, right? And those properties provide you shelter, so that's important. That's a really big expense for people, right? Especially who knows how large your family is by that time. Let's say it's really $3,000, right, to house you, and you got 2-3 kids or something like that. You have 45 dogs or something, 2 cats, but. Right, we really have to think about those expenses. So getting property early on, when you retire at 40, you could be, living in that property that you bought 20 years ago, and it's paid off, or is close to paid off, and you have 5 properties, or you have 6 properties, or you have 10 properties, because you started early, right? And you got onto it when you were that E1, that E2, that E3, that E4, before it was time as an E5 to move out the barracks, or E6, or before you got married, where then you got authorization to get off base, or before you had a child dependent, where then you got authorization to live off base, or you're your parent, right? If you take care of a parent, right? You have the ability to live on base, right? But you make no money living on base housing. Right? And that is also for a certain type of people. Everything is for a certain someone, but we really have to dissect who you are and who you want to be and where you're going and your mindset to really determine that right there. But base housing is great for certain people. Hey, you have a lot of base support, you have a lot of families on base, you do a lot of stuff on base, you use the CDC, whatever it is, great, stay on base. If you run the numbers and economically, it doesn't make sense to get a property off base. You live in a place where the price of the properties doesn't match the BH or rentals, whatever it is, right? $1 million, great, live on base. It's not the worst thing, right? Because you're not spending a lot of expenses either. This is all a net equation. I want you guys to really start thinking about that, where it's all a net equation, right? Income, expenses, income, expenses, income, expenses, right? And then what do you have left? After that, hopefully you have some left, right? You should have, I don't like should, but you may have savings, you may have investments, right? You may have projects, specific saving funds for specific things, right? But income and expenses, right? So if you're living on base, maybe you have very low expenses, right? Because that's being taken care of. Great. You financially, you still may be saving a lot, right? Aside from your BA, right? Your rank, depending on officer enlisted, maybe bringing in a great amount of money, and because you live on base and it works out for you guys can save money. Great, 1,000%. right? Now, the single guy, the single E5 guy or gal that moves out may not have that same story, may not have the same needs that they need on base, right? Why would it make sense for them, a single person can't live, a single E5 can't live on base housing, right? E5 or E6 doesn't matter, but they can't live on base housing unless they have a dependent, right? So they have to go out in town. Anyways, so go out in town, make money, whether it's 4 years, 6 years, 8 years, 20 years, right? You want to get as many properties. Hey, this is real life monopoly, right? So I'm trying to get as many properties as possible. I'm trying to invest in my TSP, my BRS as much as possible. I'm investing in a separate stock account, right? A Roth ROA. I may have from that a separate trading account for options, and then I definitely would have a different account for crypto, right? And then we got businesses, right? I don't talk about businesses too much, especially while you're serving, because you put a lot of focus, energy, and time while you're serving into that, right? Into serving. People are like, oh, just get it. I know people have gotten second jobs for sure. Depends also on your billet, where you're stationed at, what you're doing. I get it. Some people they do tons of college classes, and they may have an easy gig. They're a supply clerk, or they're whatever type of technician, or they're not doing ops. You're not on a workup cycle anymore. You don't gotta do any of this, any of that, right? Some people, I feel like I didn't have that experience, right? So I don't talk about running other businesses as much. Now, at the tail end of your contract, if you're thinking about getting out, for sure. If you're thinking about it, yes. Work on that business, work on that idea while you're still in, so that there's some overlap, right? So that you're getting possibly some support from people while you're serving, and then that can help project you outwards and upwards, right, in that direction that we want, so you have a little bit of a trampoline instead of wait till you're fully out and then, hey, let me get started. Work on that hobby. You're 2 years out, you're doing planning, and then get ready to get out and transition. That's a whole nother video that we went on a little tangent on that, but obviously it should be military veterans, anyone who qualifies for a VA loan should be watching this, but that's just a little bit of advice, and that's the level that I really like to take this, right? We have to think of a large picture while we're also looking at a micro picture. So we're going from macro to micro, and we're also really, really asking those questions about what is it that you want, where do you see yourself long-term in your career, and we build a plan and strategy to fit that, and we're always able to pivot, right? The plan is always flexible. The plan is just the plan, right? The paper barely survives. First contact, the plan is out the window, right? We had this happen, all your SOPs, right? You practice all day. So let's have a plan, though, that we can pivot from, but at least we have a little bit of guidance of, okay, this is what we said, this is the route that we want to take, this is the vision, always open to change, but at least we have a framework so that we can have that foresight to do future planning, right? Some of the best planners, they're thinking 100 years out, right? 100 years, multiple generations, 3 generations out. That's proper planning, not just a year, not 2 years. We have to do all of those small short-term goals, midterm goals, long-term goals, super long-term goals, super saiyan long-term goals, right? So, but with every level, we have a framework, and we just know this direction that we're going. So I want you to think about that end of this video. Are you more strictly, I want ROI, right? I want the maximum cash flow, the maximum appreciation that I can get. I care about how many rooms I can get, how many units I can get, right? How much can I get for this property? Or do you think you're more of the personal type, right? Where you're more really caring about the property itself, what it looks like, what it feels like to you, and you're not really worried about how much that property is going to make you, because to you really want a home, right? Now we have the in-between of, hey, I want a property that I really connect with, but I also want a property that has a good potential to be a rental or for a good sale in the future. So I want you to think about that. Which one do you think you are? And then when that kind of comes to mind, or if you already know, I want ROI, right? Or I want a nice cozy home that touches my soul, that I really connect with, that I'm going to raise my kids in, whatever that is, right? Comment down below. Or if you're in the middle, right? Are you ROI focused? Are you over here for ROI? Are you over here for personal? or are you over here in the middle? Comment below. I'd love to see your comments, and let's talk about it, because I also share, well, which one am I, right? A lot of people would be surprised. So comment which one you are. Are you the ROI type? Are you the personal type? Or are you the middle, right? Do you want a mix of both of them? And I'll also share with you which type I am. So I really do appreciate y'all time watching this. Like I said many times before, please visit the website, themilitaryrealtor.us. There's free guides there, free resources, free tools, and book your free consultation to get started talking to me, Mercedes the Military Realtor, about your real estate journey, using wealth to get you there, right? Don't forget it, we're talking real estate, business, stocks, and crypto. Thank you for coming to Military Wealth Club. Take care and good night.